revenue and profit both beat expectations, yet the stock still took a heavy hit. So what exactly happened to AMD? Has the AI boom already peaked? Or is the market quietly setting up one of the biggest mispricings we've seen in years, with an intrinsic value anchor around $352? Is this pullback a trap with a final boarding call before the next computing power supercycle heading into 2026? Hey everyone, welcome back to Stock Market Breakdown. AMD's price action has confused many investors lately. The fundamentals remain strong, yet the market turns harsh when guidance sounds cautious today. We'll step beyond short-term noise and break down AMD's real mode from valuation logic to its deeper AI infrastructure partnerships. Looking strictly at the financial results, AMD delivered revenue and earnings that both exceeded market expectations. However, the intense volatility that followed the earnings release was largely driven by slightly softer forward guidance. Wall Street interpreted this as a potential signal that data center growth momentum might slow down, which triggered a collective reassessment of AMD's valuation narrative. It's important to be clear here. This is not a collapse in the business itself. Instead, it's more of a valuation compression event, where excess expectations in the broader AI sector are being squeezed out of the price. To understand what's happening, you have to look at the idea of a reset in expectations. When the market gets used to explosive growth, even steady guidance can feel like bad news, but the data tells another story. Sharing servers and data centers is still climbing. This pullback isn't weakness. It's the market recalibrating AMD's real growth pace. If we return to the core logic of value investing and run a disciplined discounted cash flow analysis, AMD's intrinsic value anchor comes out to roughly $352 per share, compared to the current market price around $204. That implies about a 42% undervaluation, even under some of the more conservative institutional estimates. The highest analyst price targets already point toward $380. This enormous gap between market price and intrinsic value is currently the most compelling part of AMD's investment thesis. The $352 target isn't pulled from thin air. It's based on AMD's projected 5-year free cash flow growth. With shares just over $200, the market price is only current business, leaving little room for AI upside. This value gap makes the risk-reward very attractive. AMD's next-generation AI accelerator, the Instinct MI350 series, represents its most important weapon in challenging Nvidia's dominance. Built on the new CDNA 4 architecture, the MI350 features up to 288 gigabytes of memory and an astonishing 8 TB per second of bandwidth. In terms of raw performance, its AI computing power is 4 times higher than the previous generation, while inference performance jumps by as much as 35 times. These kinds of massive performance gains directly address the growing demand from large AI models for enormous memory capacity and ultra-high bandwidth. The MI350 launch signals AMD's rise from a follower to a true peer competitor in AI inference. Memory capacity is everything. With 288 gigabytes, the MI350 naturally handles ultra-long context large models, giving it a clear edge and striking directly at Nvidia's Blackwell architecture. AMD's collaborations with giants like Meta and OpenAI have evolved into deep strategic partnerships. The relationship has moved beyond simple hardware procurement and into the construction of AI infrastructure, supported by gigawatt-scale power capacity deployments at a scale implying not just larger orders, but multi-year hardware upgrade cycles. These long-term infrastructure contracts provide AMD with something extremely valuable: revenue visibility and business stability over an extended horizon. In the AI era, the limit of compute is power. Meta and OpenAI are willing to commit gigawatts of electricity to support AMD's hardware, treating it as a critical lifeline for compute. This deep alignment turns AMD's business from ad hoc sales into the core backbone of major AI infrastructure. To break Nvidia's CUDA software monopoly, AMD is aggressively pushing forward with the Rome 7 open software stack by deeply integrating with major AI frameworks like PyTorch and TensorFlow. AMD is working to lower the switching costs for customers migrating from Nvidia's ecosystem to Rome. Strengthening the software ecosystem is the critical step that allows AMD to move from usable to truly developer-friendly. It's also a key lever for expanding its share of the high-value data center market. For years, many avoided AMD because the chips were weak, but because the software was a nightmare. Rome 7 fixes that. As more developers embrace open source, CUDA's moat slowly erodes. Once Rome enables seamless migration for major AI frameworks, AMD's hardware value advantage will explode. Despite the ambitious roadmap, AMD still faces significant challenges. The first is Nvidia's Blackwell architecture, which continues to demonstrate overwhelming market dominance and puts enormous pressure on second-tier competitors. The second challenge lies in AMD's own execution. The market is closely watching whether future products like the MI350 can be delivered on time and meet performance expectations at a valuation around 65 times earnings. Any delays in development or delivery could quickly undermine the company's valuation foundation and trigger sharp stock volatility. AMD is up against the most powerful semiconductor giant ever. Blackwell's performance puts real pressure on AMD. It's a high-speed, high-stakes, race fast, with almost no margin for error. Any MI350 yield issues or MI400 delays, and the market will pull back instantly. From an investment profile perspective, AMD is a classic high-growth, high-volatility stock. Its current price-to-earnings ratio of around 65 reflects extremely high expectations from the market, while its beta of 1.94 means the stock is nearly twice as volatile as the S&P 500. In other words, AMD's price movements tend to be amplified compared with the broader market. In short, AMD is a high-stakes bet on whether a challenger can break through with $352 intrinsic value, MI350's performance, and gigawatt-scale order visibility. The 65x divided by ensures bumps ahead, and this pullback is 42% undervaluation worth buying. Comment your thoughts and subscribe.